Awesome. Thanks for joining us today, everyone. We have Mike Schroeder,
Morning.
and he's going to be our financial expert, answering all of our fun questions that you guys have. Mike, thank you so much for being here. I really appreciate this. I know it was a rainy day, but hey, it's always good to see you.
Thanks for bribing me with the good coffee first thing in the morning. I always appreciate that, especially on a rainy day.
So, just going over, this is the first podcast ever. I wanted to have Mike in the podcast as our first appearance because I've actually known Mike. I've known you the longest, I believe, in this industry since I've started.
What, 5 years now, I think?
I believe so. Yeah, yeah.
Awesome.
Almost
Yeah.
almost coming to 5 years. Yeah, 2020 is when I started. Yeah, that's phenomenal. So we have three mics here. Mike one, right over here. We got a mic, and then we got Mike. So Mike, I'm gonna just get right into it. So, my clients and even people who just inquire about real estate services, they ask me frequently, how do we obtain financing? And one of the questions that comes up is why use a mortgage broker? People are telling us to use a mortgage broker, but why? What are the benefits? And I was hoping that maybe you can kind of chime in and tell everyone all of the great benefits of using one.
Perfect. Well, I always like to use the analogy of going directly to your bank or credit union for a mortgage is like walking into a Ford dealership and saying, "What brand of car should I buy?"
Mm-hmm.
They literally only sell one product.
That's true.
That doesn't mean it's a bad product. In fact, I work with a number of banks and credit unions, but it means you're only being offered the product that they offer. And there's so many subtle differences from one lender to the next that what a broker does is we shop around to all the lenders. We find the deal that meets your criteria.
Mm-hmm.
And sometimes as well, if people come to me who have been declined by their own banks or credit unions, and we
Right.
manage to get them financing at another bank or credit union because of a slight difference in policy.
Right.
So that's reason number one.
Okay.
Reason number two, that in most circumstances, our services are free of charge.
Mm-hmm.
And so it's not costing you anything by using a broker.
Right. Yes.
And lastly, I always like to joke that I don't work banker's hours.
Mm-hmm.
And so if you have a question at 9:30 at night on a Thursday, I'm picking up my phone because real estate's not a 9 to 5.
Right. Totally. Yeah. Those are good questions. I mean, those are good answers. What am I saying? Those are good. Well, those were phenomenal questions, right? The one thing that you mentioned is that there's no fee associated with it, right?
Mm-hmm.
I think there's a common misconception to a lot of people, even in real estate, that, well, for example, that the buyer's agent collects fees from the client. When the clients find out that that's not true, well, it's like light bulb. Oh, really? Yeah. And this is one of so our industries, yours as well, is one of the only few industries where clients get phenomenal service for no cost,
Mm-hmm.
which is why it's very important for them to go to the best, right?
Absolutely.
Yeah. Yeah. So that's exciting. So guys, whoever's watching this, make sure that you guys are picking the right mortgage broker when it comes to obtaining financing, because you want to be represented by the best, and especially if it's a service that's free of cost. Going back into one more thing, Mike. So you do still deal with those traditional banks as well, right?
Correct. And so not every bank deals with brokers,
Right.
but most of the major ones do.
Good.
We
Yes.
have access to several credit unions.
Right.
We also have trust companies and monoline lenders we do.
Mm-hmm.
And that's about half our business right there.
Right.
The other half of the business, though, and this is where it gets a little technical, is what you would call alternative mortgages.
Right.
And so sometimes, for example, if you're self-employed
Mm-hmm.
and on the books, you don't show a lot of income,
Right.
but your business is financially healthy.
Right.
We can help you obtain a mortgage with a non-bank lender for those.
Right.
Or if you're doing a buy, fix, and flip program, or if you're paying out, say, CRA arrears or property tax arrears,
Mm-hmm.
we have alternative lenders that can help you in those scenarios.
Right. Yeah. Absolutely. Absolutely.
And each lender is like a tool in the toolbox.
Mm-hmm.
So, for example, I had a client that chose a lender at a higher rate. You're
Mm-hmm.
thinking, why would they choose a higher rate? Well, they want some renovations done in their house.
Mm-hmm.
The first lender who was going to fund the renovations wanted the work done in 6 months.
Okay. Yeah.
The second lender said, "Oh no, you have 12 months."
Okay.
They picked 12 months because they knew it would take them longer to do the work,
Right. Yeah.
but they charged 0.1% higher.
Okay. Yeah.
And so it's not always about the rate; it's about the best product.
Totally. Absolutely. Absolutely. Yeah. And you have access to all these products too, whether it's first-time home buyers, whether it's people who are new immigrants to Canada as well. I've had people who recently got their PR, and they don't know that they're eligible even for a mortgage. And there's different products, right? So, for example, and correct me if I'm wrong, but um, you know, traditional banking requires a credit history. But if you're new to Canada, there are certain products available that still allow newcomers to have access to mortgages, right?
Correct. And it all comes down to how much of a down payment you have and
Right.
how long you've been here for.
Okay.
So there's a program in place for 5% down,
Right.
program in place for 10% down,
Mm-hmm.
25% down.
Right.
All comes down to how much cash you brought with you for down payment.
Right.
Depends on which program you can take advantage of.
Right. Yeah, that's phenomenal. And yeah, I don't really have proper answers to those. I just shove them to Mike, and Mike will have to take care of that.
Thanks, man.
Um, cool, Mike. One more thing that is a common hot topic is interest rates.
Mm-hmm.
You know, we just had a massive decrease just a couple of weeks ago, and they're expecting that on December 11, I think the Bank of Canada has an announcement to make.
Mm-hmm.
So, what are the experts saying, and what does all that mean for, someone who wants to get a new mortgage or even refinance their mortgage?
Sure. So the first question you always want to ask yourself is we kind of start with, do you want to go with a fixed rate or a variable rate?
Mm-hmm.
So these big announcements that happen, these announcements only directly affect variable rates.
Okay. Okay.
So when the Bank of Canada, so when you hear in the news, hey, the Bank of Canada lowered interest rates by 0.25%,
Right.
you have to immediately add to that, no, they lowered variable rates by 0.25%.
Mm-hmm.
Fixed rates move on the bond market.
Mm-hmm.
Now, sometimes when the Bank of Canada lowers rates, the bond market responds by the
Right.
lowering.
Right.
But then you get a U.S. presidential election, and sometimes the rates go back up again.
Okay.
So
Fair.
because they follow different economic activity.
I see.
So what I always like to start by asking my clients when they're
Mhm.
asking, well, should I go fixed or variable?
Mhm.
My first question always is, how long do you plan to stay in your house for?
Okay. That's valid. That's a valid question. Yeah.
So if you say, I think we'll move in about 3 years,
Mm-hmm.
why on earth would you take a 5-year fixed rate then?
That's true. Yeah.
You're going to get hit by a penalty to break that mortgage.
Right. Yeah.
A 3-year fixed rate or a variable may be a better choice for you.
Right. Yeah. And people probably just opt into the 5-year because they see a lower, interest rate. Yeah.
They see the lower rate in the 5-year fixed
Right.
and not realizing that as rates come down,
Mm-hmm.
okay, your penalty actually increases.
Oh, interesting.
So if you take
Yeah.
a 5-year fixed rate today at say
Mhm.
4.29,
Okay.
and let's say a year from now the rates have gone down to, let's just say 3.29,
Okay.
you try breaking your mortgage, that penalty has now gone up.
Right. Yeah.
So you are exposing yourself to penalty risk by taking that 5-year term.
Interesting. Okay. Yeah. So sometimes it is better to take a higher interest rate on a lower term to avoid any penalties. And those penalties could add up, obviously, right? Yeah.
The most egregious story we ever saw was back in about 2022.
Okay.
A woman in Toronto had a $500,000 mortgage.
Okay. Yeah.
She broke a 5-year fixed rate a year and a half into it.
Okay.
Her penalty was $27,000.
That's crazy.
Now, if she had taken a 4-year fixed rate instead,
Yeah.
her penalty would have been $6,000.
That is a massive difference. Yeah.
So no one walked her through the penalty risk of taking a 5-year fixed rate. She could have stayed with the same lender,
Mm-hmm.
taken a slightly different product,
Right.
and
Yeah.
saved herself over 20 grand.
I'll be honest, Mike, that's stuff that I have not even considered,
Yeah.
even, right? I didn't realize that, because when I take a look at the numbers that you just given me, 500,000 is, what a lot of transactions in Winnipeg are going for, right? So if somebody
Mhm.
takes a $500,000 mortgage for 5 years, which is pretty common, and then they had to break or, refinance even, yeah, I never realized that it could be at 22,000. That's a massive hit, totally.
Now, keep in mind, that is not the normal situation. There's a
Totally.
lot of rate discrepancies at the time, but I've seen it happen. We estimate about 2/3 of people
Mm-hmm.
end up breaking their mortgage in an average of about 3 years.
I see. Yeah.
And so kind of keep that in mind. And that's especially true for first-time home buyers.
Right.
Because when you're younger, there's a big chance that you'll see significant life changes.
Mm-hmm. Yep.
Get married, get divorced, have a child, lose a family member.
Yeah.
Any one of a number of life events may cause you to need to move,
Mm-hmm.
and that exposes you to penalty risk.
Right. Yeah. Well, that is interesting. So these Bank of Canada point decreases typically affect variable rates, well, directly, I guess.
Correct.
And then indirectly, it'll cascade down to the fixed rates, but not to the same degree, right?
Correct. So let me give you a different example. So back last year, I think it was last March or April.
Okay.
In 1 week, the Bank of Canada had said we're keeping rates the same.
Right.
The Federal Reserve had said they're keeping rates the same.
Right.
And then on a Friday afternoon, Silicon Valley Bank collapsed.
I remember that.
And the bond rate plummeted.
Right.
Because of that.
Right.
And so sometimes these black swan events happen that they can massively affect the bond market.
Right.
And so because of that, I'm really trying to stay away from making rate predictions.
Right.
Instead, I'd rather ask clients those questions of, number one, how long do you plan to stay in the house for? And number two, what's your risks model like? So if you tell me, oh no, I only invest in GICs, why would I put you into a variable rate mortgage? You're going to lose sleep at night. Even if it is statistically the product that'll save you the most money over the length of the mortgage.
Right.
If you're going to lose sleep over that, why would I put you in that product?
Right. Yeah, that's true.
You're probably better suited for a 3 or 4 year fixed rate where you know what the payment's going to be, you know the risk, and you're not going to be losing sleep.
Right. And that's the mic service. That's phenomenal.
Well, it's about asking better questions. You know, like
Yeah.
your risk tolerance. What is your spouse's risk tolerance? Are you planning on having kids? Are you planning on a career change?
Yeah.
Different example. I had a client once that insisted on going with a credit union. I talked to them more, and they were with the RCMP.
Okay.
I said, well, you do know that if you get transferred out of a province, you can't transfer a credit union mortgage.
Right. Yeah.
Oh, so I should probably be placed with a major bank then instead. Yes.
Right.
So it's all those little questions that get you into the best product.
Right. Totally. Yeah. That's good. Yeah. And then these questions are questions that the average person who's looking for a mortgage probably doesn't even know that they should be asking.
Correct.
Right. So going with, that's, going with somebody who's been doing this obviously is great because you ask those questions. Like, for example, there's things that I've learned today from you that I didn't know. There's so much stuff in this mortgage realm that I don't know, right? This whole financing realm. Yeah.
Well, and on that note, it's always important to get the right advice from the right person. Sometimes people asking, well, is this a good price on a house? Ask your realtor. That's a realtor question. You need to have a proper realtor, proper lawyer, proper accountant, right? And each one of them gives you advice in their line of work, So,
absolutely. Yeah. That's true. So Mike, what kind of questions do you typically hear from your, well, actually better question is, with December coming, I know you had some opinions on what that's going to look like, what that's going to shape the future for buyers on, without predicting rates. What do you think is going to happen in December and early January? And what kind of questions are you expecting to have from your clients? And how should the general consumer also prep for whatever we might anticipate?
Sure. So there's basically about 4 different major programs that are coming into place.
Okay.
Some of them are partially in place already.
Okay.
So the first big one is going to be that first-time homebuyers are going to be able to get a 30-year amortization when buying a house.
Right. Yeah. Yes.
So right now the maximum amortization is 25 years.
Right.
So you might say, well, why would I care about that? Well, on a $250,000 mortgage, a 30-year amortization lowers your payment by a little over $100 a month.
Right. Yeah.
Now, I want to be clear on my wording. You're not actually saving money because you're going to pay it over the life of the mortgage.
Yeah, with interest. Yeah.
But if you're a first-time home buyer in your 20s and you know that you're at the bottom of your earning potential, your earning potential will increase over time.
Right.
To take a lower payment when you're starting out, and especially bank the difference. Build an emergency fund or put it against the mortgage, right?
Right, yeah.
And so these ways will help you get further ahead financially.
Yes, yeah.
So that's number one.
Yes.
Number two, anyone buying a newly built house or condo can also get a 30-year amortization.
Right, yes.
Which is fantastic.
Yeah, phenomenal. Yeah.
Now, the next one is going to be more applicable in some of the bigger markets like Toronto and Vancouver. But right now, if you want to buy $1 million plus home, you have to put 20% down.
Oh, yeah, this is a good one, yes.
So if you want to buy a home for, over $1 million, most people just don't have that kind of money unless they're inheriting it from family.
Yes.
Now, gets a little complicated. You have to put down 5% down
Mm-hmm.
on the first 500,000 you're borrowing,
Right. Yeah.
and 10% down on the difference.
Right. Yes.
So, using an example of a home for about 1.25 million,
Mm-hmm.
right? You're gonna have to put down about $125,000.
Yes. Yeah.
That's a lot less money than what you currently have to put down on that today to buy that same house.
Yeah. 20% as opposed to 10%. And then the ceiling, I think, is raised from 1 million to 1.5 million, if that not
Correct. So it's
right?
going to be 1.5 million.
Yes.
You can still get a 30-year amortization on it as well.
Right.
So it's one of those things that's going to help more people get into the housing market.
Yeah, exactly. Yeah.
And then one of the last changes, and this last one, we don't know as much about it because the government hasn't given all the details.
Okay.
But there's going to be a program where right now, if you want to refinance your home,
Right.
you can only borrow up to 80% of its value.
Okay. Yes.
In January, you're going to be able to borrow up to 90% of the improved value
Oh, okay.
if you're borrowing money to add a suite to your house.
Oh, okay. This is news to me too.
Yeah.
I did not know that. Okay.
So with this program, the idea is going to be is that if you have a house and you want to say put in a basement suite,
Yeah.
or a granny suite, or
Yes.
a garage suite,
Mm-hmm.
it's going to be easier to borrow the money from the bank to do that, and that's part of the government's reaction to a housing crisis in Canada.
Oh, interesting. Okay.
And so we don't have all the details of how it's going to work. There's also going to be some sort of government loan program to add on a second suite.
Okay.
So we're still waiting on details, and those changes aren't coming into place until January.
Interesting. Okay. So we should do this again in January and talk about those when they're out, right? Okay.
And so that's going to be important to get those details because I think there's a lot of people that would like to have that income from investing in their home,
Yeah.
but they don't have the large amount of capital needed to do those renovations.
Absolutely. Yeah. Anyways, Mike, thank you so much for your time. I really appreciate you coming out here. Make sure you guys follow Mike. The link for his social media content will be somewhere in this video. Make sure you guys are following me if you guys aren't already. If you aren't, then that doesn't make sense because you should be. You should be following both of us. Again, Mike, thank you so much for coming out. I really appreciate it. And we'll see you guys next time. All right?
Thank you.